All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for a market bias update report for Sunday, March 2nd. So, before diving into the charts, just a recap of last week's trading. I ended up having a gain over the week of $5,232.50. That was for 10 trades, 7 wins, and 3 losses. Ended up saying last week in the video that I was expecting more bearish to come, that we were going to probably come down into the support zone around 58 and then have a bounce back up into the 50-period moving average. That is exactly what we got. I ended up actually closing out most of my bearish trades down at the lows of the day on Thursday. Got a nice reprieve rally on Friday, and I am expecting more bearish action to come. So my base case is going to be looking for weakness in the market. I do not think that we are out of the woods quite yet, so that is my thesis moving into our chart analysis. So starting right off, looking at the S&P 500, again, we did break down below all of our moving averages. Our RSI did bounce on the oversold mark and is now in the bearish territory, but not oversold, meaning that we can potentially roll over and take another leg down. Same thing with our MACD. It is breaking down into bearish territory, but still has lots of room to the downside potentially. Going out to the triple Q, this is the Nasdaq. It basically rinse and repeat the exact same thing. Same on RSI, same on MACD, same on price point, except that we actually broke that last pivot right there that was our support zone and are actually threatening down a little bit closer towards that 200-period moving average. We also have a little bit more room potentially here if the market does decide to find its footing for a little bit of a reprieve rally. So I'm a little less bearish on the triple Q for the first day or two, just in case we do get a little bit of a reprieve rally. But overall, same thing as the S&P. I do expect further downward pressure over the next couple of weeks. Going out to IWM, rinse and repeat, exact same thing. We broke down below our all-important 200-period moving average on the daily chart. If we toss this one out to a weekly time frame, you can see that we recovered a little bit of that, and we still closed below the 50-period moving average on the weekly chart. I am expecting this probably to sell off and come down to the 200 or 205 level over the next week or two. Going out to the Dow Jones, did end up having that little bit of a bounce. And this one is interesting because the bounce actually fully engulfed basically the last 4 or 5 days worth of trading here. So we have this tight little range, and that bullish momentum on the Dow Jones was actually enough to close at the high of that range. So that strikes me as a little bit interesting. Not sure which way this chart wants to go yet. It will likely just follow the rest of the market. So I will be keeping my eye out for that. A trigger below the lows here would be playable to the downside and likely coming back down to the 420 level. Not sure that I would be interested in playing the upside unless it was for an intraday day trading situation. Other than that, probably not interested in playing this to the upside. Now, if we go out to IBIT, this does not show the full picture. And I know at the beginning of the month, or excuse me, beginning of the year, I ended up saying that I was going to shift and focus mostly on sector ETFs for this analysis because it's a little bit more accessible to those that are new to trading. But this is a story that has to be told on the actual futures market. And here's why. So futures market is already open. It opened about an hour and 15 minutes ago for the trading week, but the normal stock market is not going to open until Monday morning, right? So that means that any price action or any news that happened over the weekend is not priced into this chart. Now, right here, you can see that we are trading down towards the lows of this bearish move. But if we go out to Bitcoin's price chart, you can see here it is up 11 and almost a third percent just in the last 24 hours. We had this big, massive gap up on Bitcoin. Now, that is actually due to Trump deciding that it was a great idea to tweet or X or whatever the hell you want to call it on his social media platforms about the strategic Bitcoin or crypto reserve that he has been touting for a while. And he decided to do that at 7 o'clock in the morning on Sunday here today, causing a big gap up in Bitcoin. Now, if I had to guess, I am guessing that this is overextended to the top side for that move and that we are likely to see a little bit of selling pressure, probably coming back down into the 90,000 zone. From there, I'm not entirely sure if we are going to recover and break back and retest highs on that news event. or if it's going to be kind of a buy the rumor, sell the news event and end up with a sell-off coming back down to test these lows. So I am going to be doing short-term trading on this potentially, but not holding anything more than a few hours likely just due to the evolving news story in this space. Going out to Ethereum, basically rinse and repeat the exact same thing. Nice big gap up here, although not as noticeable on the chart for Ethereum. Again, just piggybacking on that news from Bitcoin. Basically, Trump announced that not only Bitcoin and Ethereum, but also Solana, Cardania, and Ripple, I think, were going to be included in that strategic reserve potentially. So all of those cryptos gapping up and dragging some other lesser known names with them. Now, going out to our 11 major sector ETFs, if we start off with basic materials, we are still just sitting on the low end of this little channel here that I drew a couple weeks back. I am expecting that if we consolidate and break back above this 20 period SMA, that we will likely test the upper end of this, probably around 90 or 90.75 once again. But I am still leaning a little bit more bearish than bullish in the overall market, especially on a slightly longer time frame. So even if we get a bounce here, I am still going to be watching for the break of this lower portion of the channel to eventually roll over and be targeting down to 84. That is my base case for basic materials. Going out to consumer discretionary, we ended up getting our original move. Basically, rinse and repeat the same thing. We are overextended on the RSI. Our MACD is in bearish conditions, but we did get a lot of volume coming in here on Friday. It'll be interesting to see how this plays out at the beginning of the week. I wouldn't be shocked to see price come back up and retest into the 23 zone, 223, somewhere right in there, meet with this downward decreasing 20 SMA, and then roll over for another leg. But we have a little bit more development that we have to have here before we are going to see which way this actually really wants to go. Again, leaning to the downside, but expecting a short bounce in the interim. Going out to XLK, we broke down below the 200 period moving average for the first time in basically 6 months. The last time this happened, we closed below and then rallied hard, starting a new series of higher highs and higher lows, moving into a short-term uptrend that lasted about 3 months, leading into the consolidation that we are now trying to break down out of right now. If we toss this out to a weekly chart, however, this to me looks like straight up neutrality until we break down below this moving average, the 50 period SMA at 222.94 cents. If we get a close on the weekly chart at the end of this week below that level, I am going to be expecting further downside to come in the technology sector, more profit taking to come, because that has been a high flyer of the market over the last couple of years. And I will probably be looking to short that if that does occur. Going out to energy. Energy basically just sitting right on top of the cluster moving averages. Don't have a strong thesis one way or the other here. If it does break down below 88.65, I will probably be talked into taking a short on that. For a bull case, I don't have a strong bullish thesis. We could put in a diagonal resistance here and say if we broke back above that diagonal resistance channel, maybe play to the upside, but I am leaning towards a stay away in energy right now. Going out to XLU utilities. Kind of similar to XLE, don't have a strong thesis on this, at least on the daily chart. If we toss this out to a weekly chart, you can see it did put in a lower pivot high here, but now it's testing right up into that level. If we do get above that level and break that diagonal, you might be able to talk me into going for a bullish opportunity here, playing back up to the highs of 83.41. And that's simply because even if the economy gets into a rut, even if fears of recession and inflation start to pop up a little bit more again, and that becomes more of the driving theme in the marketplace, utilities are something people have to spend money on anyways. Doesn't matter if it's a recession, right? So that's kind of a defensive area of the market. So I might be interested in playing something in the top side, but more likely I will just leave that sector alone. Going out to consumer staples, had a nice big bull run over the last few weeks, ended up pulling back into the 9 EMA and testing. bounced off, and we are threatening to break out here a little bit more. We did break on the diagonal on the weekly chart, and I'm expecting this to probably come back up and tap the highs up here around 84.53 before probably going neutral or giving a slight pullback into the 82.50 level. Going out to XLC, clear off our drawings there that are old. To me, this is still setting higher highs, higher lows. So this is obviously bullish in the long-term 3-week chart, has not done anything wrong, still respecting the 9 EMA, which is kind of our line in the sand for momentum on our shorter term trades. If we drop this down to a daily chart, however, you can see we are sitting on top of the 50-period SMA. If we break that line, and I'm going to put an alert at 125 cents, if we break down below that line, I will probably play that down to about 95 or maybe even 92 to the downside. Going out to industrials. Man, this looks a lot like utilities. If we toss this out to a longer time frame chart, basically just in a little bit of a wedge pattern here, until we break one side or the other of that, there's not really a strategic play. If we do get down below 130, I would be playing that to the downside most likely. Not interested really in a push above our diagonal resistance for the bulls because my overall bearish is still thesis. My thesis is still bullish. Going out to XLF. XLF dropping back to the daily chart here, continuing to push in and test this range. It has been putting up a huge fight. When we had this candle right here, I was actually expecting us to come back down, touch this 50, go sideways for a couple days, and then break lower along with the rest of the market. But it is actually holding up sneakily well. And we did have this nice big volume bump on Friday's candle, pushing it back up basically right into the horizontal resistance line and just a stone throw away from our diagonal resistance line. So right now it's telling us that the chart wants to be bullish. I'm not buying anything in a bullish manner right now, so I'm going to stay away from it, but it is intriguing that that sector is holding up, and it gives me a little bit of pause about trying to short some of the other areas of the market. Going out to healthcare. Healthcare is one of the more defensive areas of the market. If we toss this out to a weekly chart, we can see that we did have a nice little sell-off here coming back down towards the 200-period moving average on the weekly time frame. That also correlated to a lot of support over here to the left of the chart. We are now putting in basically a little cup and handle pattern here, and I am interested in playing this as a pop back up to all-time high around 159.50. I think that there is a really good chance that if anything is bullish in the market, that the healthcare sector is going to be, because similar to utilities, when people need to spend money on their health, they spend money on their health. It doesn't matter what inflation is doing or anything like that. This is a defensive area, and I do see a lean to the upside right now for healthcare. Going out to XLRE, this is our real estate ETF. Nothing to see here, not super interested in it. I honestly might even take this thing off of the list for stocks or ETFs that we track on this weekly report, just because I hardly ever trade it. In my 8 years of trading, I have probably traded this thing like twice. So the effort here is lacking because it is not something that I like to particularly trade. It's not as liquid as some of the other ETFs either, so it is kind of a stay away for me. Overall on the chart, we need to see whether or not this is a lower pivot high or if this is just simply a higher pivot low based on the longer time frame here with a higher high and a higher low here, and then another higher high and higher low here. Either way, not interested in playing this one. Going out to gold, dropping this back down to a daily chart. You can see actually I had a covered call sold here if prices go back above 272, and I'm just sitting there cash flowing on any price decrease. I am expecting this probably to bounce back up into our decreasing moving averages on the daily chart and then likely go neutral or roll over once again. I do think that we are likely going to go down and test the 255 to 275, 257 level. Going out to silver. Silver, similar to gold, had the sell-off back down into the 50-period moving average. Our RSI is in bearish territory. Our MACD is in bullish territory, but we got our first warning shot across the bow here with the cross of our MACD and signal line. If we toss this out to a weekly chart, this is starting to shape up as kind of a head and shoulders pattern, although a little bit sloppier for my taste. but I am kind of expecting that we are probably going to come back down and retest this 50-period moving average on the weekly over the next week or two. And if that breaks, it is just a stone throw away back down to 26. Going out to the US dollar, dropping this back to daily chart, we are back below our 50-period moving average. This to me looks like a retest of that 50-period moving average, which had been acting as support, now potentially acting as resistance, and I am expecting lower prices to come on the US dollar. Going out to our heat map, this is our FinViz heat map set for 1 week performance. We can see over the course of the last week where money was rotating into and out of different areas in the market. Obviously, we can see technology and consumer cyclicals, communication services are the weakest portions of the market. Those are all of these set in red. The rest of them were kind of mixed, except for healthcare and finances. So healthcare and finances are the ones that were benefiting over the last week's money rotation out of tech. The rest of them were just kind of a mixed bag, so kind of staying away from those. So financials and healthcare especially being the one that I am most interested in for the bulls. Going out to Forex Factory, looking at the economic data for the week ahead. On Monday, we have ISM manufacturing data. Tuesday, nothing is scheduled as of now. Wednesday, we have farm roll change, ISM services for PMI data. Thursday, unemployment claims, and then Friday, a whole slew of things, including a speech from Jay Powell. So that will be interesting to tune into. Again, we are still in a scenario where Trump can schedule and have speeches whenever he wants. Again, we showed this on previous ones, but if we push back into the previous weeks, you can see 3 different days out of the 5 trading days last week, he had a kind of impromptu speech that definitely has impacts on the market. So know that even though there isn't anything like that scheduled now, by the end of the week, there will probably have been at least 1 or 2 of those throughout this week. So keep an eye on Forex Factory. I just keep it up as an open tab on my screen and come back to it and refresh it once a day so that I know what's going on and can tune into those speeches once they get scheduled if I need to. With that, guys, trade safe. As always, if you have any questions, hit me up in the comments. Give me a like and subscribe. Would really appreciate it. And share this if it is helpful to you. With that, I'll catch you next week.